I've been in Bitcoin for 8 years now, and I've made a lot of mistakes. I've lost money, I chased hype, and I've fallen for the same traps that most people do. And along the way, I've had one massive revelation which completely changed my results. It's the one lesson that helped me to go from losing money to actually building wealth. And honestly, I wish someone would have taught me this many years ago. It would have saved me so much time, stress, and missed opportunities. So that's why today I'm sharing this one key lesson with you so that you don't have to make the same costly mistakes as I did. So if you're serious about making money, pay attention because this might change everything for you. And if you enjoy watching videos just like this one, where I break down complex topics in the world of investing, money, and crypto, then make sure to smash the like button and to subscribe to my channel because I'm going to be posting regular videos just like this one to make sure that you maximize your profits as a crypto investor. Now, let's dive in. 8 years of Bitcoin advice. You must understand this before it is too late. So this was me 8 years ago in 2017. This was when I started my crypto journey. I was backpacking through Thailand, and one of my friends was making a lot of money with crypto. And at that point in time, we were just entering the 2017 bull market cycle. Everyone around me was talking about how much money they made with crypto. And at one point, I had so much FOMO. So I grabbed my friend and I told him, now you're going to teach me how to do this whole crypto thing. At that point, I had no clue what I was doing. I was simply hoping to get some magical investment tip, which would make me super rich overnight. Well, in the past 8 years, I have gone through quite a transformation in my crypto investing journey. In 2008, I was introduced to Bitcoin mining. One of my friends brought another friend who told me that he was mining Bitcoin. At that point in time, I thought I already missed the boat and that I was 15 years or whatever, 10 plus years too late. And now, in 2025, I'm actually managing 80,000 Bitcoin mining machines. So here you see some images of that. Here you see an image of me in the mining farm. Here you see another image of me in our mining farm in Ethiopia. And here you see an image of me in my first mining farm in Kazakhstan at that point in time with 20,000 mining machines. Along the way, I have learned so much about Bitcoin. I've made many stupid, ridiculous mistakes, which I could have avoided if there would be someone just like me today that is sharing this message. So basically, I'm recording this video for me 8 years ago. And please pay attention because what I'm about to say might literally change everything for you. Because back in the days, I was simply chasing hypes, all right? For example, investing in Dogecoin because you believe it was going to go to the moon. In the internet, Twitter, social media is full with people hyping each other up, YouTubers talking about crypto projects, altcoins, meme coins, whatever, 10x, 20x, 30x. So everyone within the crypto space gets so hyped about all of the money that they can make. And they want to make it today, all right, with as little effort as possible. And they're willing to risk everything. But ultimately, when you're investing like this, then you'll get the same results that I got, which was that the moment you're investing in the hype, then you're just getting into a project, and then poof, you'll notice the market starts to dump. And you'll panic, and then you'll start to, panic sell your investments, and you want to get out as soon as possible before your investment goes to zero. And now, after I went through this exact sequence of events a few times, like getting into the FOMO, getting into the project, throwing a few $100 left and right at different hyped up projects, then seeing those same projects getting completely, getting completely dumped and collapsing. And all of that happened even though all of these people on the internet were shilling me these projects, were telling me that this meme coin or altcoin or whatever small cap crypto project was going to go to the moon, was going to 10x, 100x. Here you see all of these thumbnails, 100x crypto. Here from $200 to 17,000. Here 100x, 100x. Here 102x, 200x, 150x. So all of these influencers, there's a whole industry of influencers or KOLs, key opinion leaders, that's another fancy word for influencers, that are talking about these projects which are pumping. Now, I was wondering why I seem to always experience this pattern. Every time I saw a YouTube video or someone on Twitter post about a coin, it would shoot up very quickly, and then the hype died down, or the developers pulled their money out of the project, and then the market started to dump again. And it seemed that every time I missed the boat. And this happened time and time again. Guys, here, look at all these charts. So for example, Floki, boom, massive pump, and then it corrected downwards. Here, official Trump coin, very recent example, boom, massive pump, and then the market corrected again. Here, Dogecoin, boom, massive pump, and then the market corrected down again. Here, Shiba Inu, same story. Boom, the market shot up, and then it went down again. So it's this exact same repeating pattern that we see all over again. So after losing money multiple times and being totally frustrated with myself, I decided that I had to study people and companies that were actually making money with investing. And within the world of finances, we call that smart money. Smart money are the institutions, the institutional investors, so the large funds or publicly traded companies that are investing with billions. And great examples of smart money right now is, for example, Michael Saylor and MicroStrategy. MicroStrategy was actually one of the best performing stocks on the stock market. Why? Because they started to accumulate Bitcoin for the past 4 years. Right now they're holding around 470,000 Bitcoin, if I'm right. Then BlackRock is an $11 trillion asset manager, meaning they have $11 trillion worth of assets under management. They are known as a company that owns the world because they own large fractions of many companies on the stock market. So they own a lot. They own a lot of real estate, and they have their tentacles everywhere. So BlackRock is actually one of the companies that pioneered AI. Yeah, nowadays we have ChatGPT, we have DeepSeek, and all of those other AI tools and platforms. But BlackRock actually started building out their AI decades ago. Their AI is called Aladdin, and Aladdin processes billions of data points of the stock market, the bond market, and other financial markets every single day. And it is probably one of the most intelligent AI engines out there. It's so powerful that even governments pay BlackRock to get access to their AI engine. And the difference between dumb money, so retail investors, the average investor that's just gambling with their life savings, and BlackRock is that BlackRock, whenever they're making a move, it's based on actual research and market intelligence. Whereas the average investor just follows a spray and pray methodology where they just put a few $100 on different investments and hope that one of those investments would just pump super hard and make them an instant multimillionaire overnight. Well, what I found out is that the rich or the smart money, they played the game differently. So here's this quote by Warren Buffett, and I'm pretty sure that you've heard this quote before, but Warren Buffett is known for this quote. He says, "Be fearful when others are greedy, and be greedy when others are fearful." And the masses, so the retail investors, are actually playing the game differently. They are investing when everything is pumping, when the market is super positive and hyped up, and whenever the market dipped, then they are selling. They're panic selling because everything, they're afraid that everything is going to go to zero. Now, the smart money understands that when the market is fearful, that's actually the best time to accumulate really great assets because you can get into those assets at bargain prices. So whenever the market is fearful, and there is this really great indicator out there on the internet which you can find, it's called the Fear and Greed Index. It basically shows the overall market sentiment of Bitcoin. And the smart money understands that the best time to accumulate Bitcoin is when there is a dip or when the rest of the people in the market are panicking. Now, why is this relevant today? Because, well, Bitcoin is hovering somewhere around $100,000, and the retail investors are super fearful. They believe that they just missed the top and that the market is going to crash from here onwards. At the same time, we see this very big difference between the reactions of smart money and dumb money. Because dumb money, retail investors, the average investor, is now selling all of their Bitcoin because they believe it's going to crash. Whereas if you're looking at the on-chain data, so Bitcoin is a blockchain, and the whole thing about the blockchain is that everything is open and transparent. You can see all of the wallets, all of the transactions, and you're seeing actually that the large wallets, so wallets that contain more than 500 Bitcoin, 1,000 Bitcoin, 5,000 Bitcoin, those wallets are now accumulating Bitcoin, which is 180 degrees opposite of what dumb money is doing. They're selling their Bitcoin right now. And that's the massive distinction between smart money and dumb money. Dumb money is investing based on emotions, mainly emotions of fear and greed. And smart money is investing based on research, on data, and on fundamentals. And smart money understands that everything moves in cycles. It doesn't matter if you're investing in stocks, bonds, real estate, or watches. Every single asset class moves in cycles. And these cycles have to do with, many different macroeconomic variables like interest rates, the debt cycle, and that has an influence on where in the cycle you might be. Now, with crypto and Bitcoin, there's something very particular because it moves in a very defined number of years, which is 4 years. The Bitcoin cycle is 4 years. Why does it move in 4-year cycles? That has to do with the Bitcoin halving that's happening every 4 years. Now, what is happening with the Bitcoin halving? Well, whenever you're doing a transaction on the Bitcoin network, all of those transactions are bundled together into large blocks of transactions. Those blocks of transactions get processed by the Bitcoin miners. And every time such a block of transactions get processed, a block reward gets paid out to the miners. And every 4 years, that block reward gets halved. So in 2009, when Bitcoin was just released, the block reward was around 50 Bitcoin per block of transactions. 4 years later, this was halved to 25 Bitcoin per block of transactions. And 4 years later, it was halved to 12.5 Bitcoin per block of transactions. And this will continue for the next 100 years until the final Bitcoin has been mined. Now, every time this Bitcoin halving happens, we see a supply shock happening on the market because people realize that Bitcoin is a scarce asset and they want to get their hands on as much Bitcoin as humanly possible because in a world where everything can almost be created out of thin air, more money can be printed, more houses can be built, more stocks can be issued, more bonds can be issued, people are looking for a safe haven asset, something that you can't just simply create more of because you cannot create more than 21 million Bitcoin. And people are just looking for a way to store their purchasing power. And that's why we're seeing such a large demand for an asset like Bitcoin right now. We're seeing hedge funds entering the space. We see countries embracing Bitcoin. We see large publicly traded companies entering Bitcoin. And every 4 years, we see a bull market and a bear market cycle. And smart money knows exactly how to ride this cycle. Now, when I first got into crypto, I didn't have any principles. I was simply, I had the lottery ticket mentality. I was hoping to just make a few small investments, a few $100 left and right, and hoping that one of those investments would earn me the jackpot, would make me super rich overnight. And then when the market did the exact opposite, so it didn't pump but it dumped, I got really fearful. I started to doubt myself, and I usually sold some of my positions at a very big loss. Now, what the rich do different than the poor or than the average investor, and here you see a really great example, is Warren Buffett. Warren Buffett has two main principles for investing. And I believe that if you want to be successful, you should find someone that has the results that you want to achieve and then simply copy their formula because probably it's working. And within the world of investing, you've got the GOAT. And with the GOAT, I don't mean the animal, but I actually mean the acronym GOAT. Greatest of all times, and that is Warren Buffett. So Warren Buffett has amassed a fortune of $147 billion, and he's done so through investing. Not by selling a course or doing something different, no, by investing. And his 2 rules for investing is rule number 1, never lose money. And rule number 2 is never forget rule number 1. So, whereas the average investor, including me many years ago, I was willing to lose everything. So I invested $100 or a few $100, and I was willing to lose it all in order to win the jackpot. Similar to how you would go to the shop and buy a lottery ticket, and you're willing to lose your initial investment, but you have the upside of potentially winning the jackpot. Now, Warren Buffett wouldn't really make such an investment. In fact, he would first think, is there a likelihood that I might lose everything? If so, I'm not going to make this investment. So actually, Warren Buffett and the rest of the smart money is actually very risk averse. Here's another quote which gives you a little bit of insights into how the rich invest differently. Here is a quote by George Soros. He's saying, if investing is entertaining, if you're having fun, well, you're probably not making any money because good investing is boring. And here again, George Soros, super wealthy guy, has a net worth of around $7.2 billion. Again, he made a lot of that through investing. So why am I sharing this quote? Well, what I see happening around me quite a lot is that people love to go in the crypto space. They love to talk about their 10x returns. They invest in some kind of meme coin. It goes up with 2x, 3x, 4x, 5x. And they, the whole concept of meme coins, it's like it is making money off an internet joke. A squirrel coin, a dog coin, a frog coin like Pepe. Yes, it's funny. Yes, it's internet culture. And yes, you can make good amount of money doing so if you time it perfectly and you have insider information. But oftentimes with stuff like this, that's very speculative, that's like a casino, and people are just chasing adrenaline. If you're chasing adrenaline and you get this hit of dopamine, then probably you're going to lose all of your money, according to George Soros. And I can totally agree with this based on my past experience. Because good investing isn't chasing adrenaline or dopamine. I'm an entrepreneur and I need my dose of adrenaline. I need a challenge. I need to achieve milestones. I need to grow as a person. But I do that with my business, or I go to a kickboxing class, or I go BMX riding in the mountains, or I go wakeboarding, and that's where I get my adrenaline, my dopamine. But if you're trying to search for adrenaline and dopamine within the world of investing, then probably you are investing in high risk, high return investments, and most likely 99% of all times, you're not going to be making money with that. Now, here is another quote that I want to share, is if you do not have a plan for your money will become part of someone else's plan. Again, 8 years ago, I was purely driven by greed. I wanted to get into the market and I wanted to make as much money as humanly possible with as little effort as possible. I didn't have a plan. I simply listened to influencers, YouTubers, and my friends. I listened to what projects they were investing in, and I simply threw a little bit of money into those projects as well. But I didn't have a plan. And you see, the whole financial markets are built to extract money from people that don't have a plan and bring it to those that do have a plan. Because those meme coins have all been launched by people with the single purpose in mind to make as much money as possible. There are so many altcoin projects out there which have been created with fancy landing pages with lots of buzzwords in order to attract hype and new investors. But many of those have been created with the sole purpose to extract as much money as possible. And yeah, so within the world of financial markets, or particularly crypto, the people that are making the most money are the whales, are the insiders, and the developers making the projects. Because those are the ones that can get in early and can sell and extract money out of the market when everything is all hyped up. All right? So probably you're going to be exit liquidity if you don't have a plan for your money. Now, rookie investors invest in high-risk, high-return investments. So oftentimes I do a poll on Instagram and I ask you guys like, hey, what are you investing in? Is it Bitcoin, Ethereum, or are you mainly invested in altcoins? And yes, there are some smart investors out there which have learned their lesson and which are focusing primarily on blue chip projects like Bitcoin or Ethereum or Solana. But the large bulk of the retail investors are positioning themselves into small cap or mid cap altcoins. And especially this cycle, we see a lot of hype around meme coins, which are high risk investments. Now, the best investors don't invest in high risk, high return investments. No, the best investors invest in asymmetrical investments. What are asymmetrical investments? Those are low risk, high return investments. Low risk, high return investments. So what do I mean with this? In the worst possible scenario, you can only lose a little bit, but in the best possible scenario, you can make a lot of money. Okay, this is not similar to a meme coin where you can lose everything in order to make potentially very small probability you can make a lot of money, similar to winning the lottery. But yeah, the best investors search for asymmetrical investments. And yes, this takes time, energy, and experience in order to find those asymmetrical investments. But in this video, I'm going to share what I believe is the biggest asymmetrical investment right now, which is Bitcoin. Why? Well, right now we're seeing so much adoption happening around Bitcoin. Literally, countries are embracing Bitcoin, hedge funds are embracing Bitcoin, even the banks, which have been the largest critics of Bitcoin for the past 15 years, they are also embracing Bitcoin right now. And there are billions of dollars that are being pumped into Bitcoin as an asset class right now. We've seen Bitcoin, every single cycle generate massive returns for its holders. So from 2011 to 2014, Bitcoin went up with almost 11,645%. From 2014 to 2017, Bitcoin went up with 7,382%. And the previous cycle, Bitcoin went up with almost 2,000%. And it has been for this reason that Bitcoin was named the best performing asset class of the past decade, because it generated on average 230% annualized return simply for buying and holding onto Bitcoin. And that was around 10 times more than the second best, which was the Nasdaq 100. So why is Bitcoin one of the greatest asymmetrical investments out there? Well, because it has so much adoption, because the Bitcoin ecosystem is really maturing at a very rapid pace. We've got the Bitcoin spot ETFs, and so many financial instruments which are being built around Bitcoin right now. We've got MicroStrategy, which has recently announced that they want to become the first Bitcoin bank in the world. I believe that for every dip that is now going to happen, there will be even more buyers than before. So that's why I believe that the dips are going to be less deep. So yeah, Bitcoin might dip 30%, 40%, 50%, even 70%, but it will probably, with a very big likelihood, come back and go much higher in the next 4 years, 4+ years from now. So if you're willing to hold on to your Bitcoin, yeah, it could dip a little bit because, again, the market is cyclical. We've just discussed the 4-year cycle of Bitcoin. But if you have a long-term trajectory in mind, or if you have a long-term wealth building perspective, then it doesn't really matter, because if you're holding on to your Bitcoin, it will go up much higher afterwards if the 4-year cycle pattern will continue to repeat in the future again, which I believe, unless we've got a lot of proof that it will not continue, it's probably the best to assume that it will keep continuing. But past performance is never a guarantee for future success. Nevertheless, so Bitcoin has the longest track record of all of the crypto projects. So a 15-year plus track record, and it had generated insane returns. Now, what was Warren Buffett's 2 rules for investing again? Number 1, never lose money. And number 2, never forget rule number 1. So where the average investor invests in high-risk, high-return investments like small cap altcoins or meme coins, looking to get rich quick with very little amount of effort, willing to risk everything to make a bit of money, the rich look at how can we find something with a proven track record that still shows a lot of signs for growth in the next few years. And yeah, how can we piggyback off that thing? So this is what smart money would invest in, instead of gambling all of their money away. And one of the nice things about Bitcoin is it's getting so mature and so established right now. Recently, China sold all of its Bitcoin that it seized in criminal court cases. And it sold $20 billion of Bitcoin, and the market barely moved. Here you saw on the 24th of January, China sold its Bitcoin, and the market went down for just a little bit, and then it went up again. So even when China is dumping such large amounts of Bitcoin, it will still be bought up by the many buyers on the market right now, like BlackRock, MicroStrategy, all of the other ETFs, and all of the other large publicly traded companies, and even banks, which are buying up Bitcoin right now. So yeah, that's a sign of a asymmetrical investment, a lower risk, a lower downside, but a really high upside potential, which is way more different than the typical altcoin, meme coin investment. So generally you tend to see a very big pump up, which gets people really hyped, which attracts even more capital into the market, and then the whales, the developers, and the insiders pull their money out of the market, and you'll be left holding the bag. And the reality is that 99.9% of all crypto projects will not survive the next bear market. Why is that? There's simply not enough money, attention, and talented developers to go around. So even if you're investing in the winners of this cycle and you're holding on to it because you forgot to cash out, because most people don't really cash out, they just get super greedy and they'll be left holding the bags, well, then you need to wait for your positions to recover, if it will even ever recover. Look, most projects will never really recover and will slowly die down over time. So again, if you want to make real money, you need to find asymmetrical investments out there. And I do believe that Bitcoin right now is the best possible asymmetrical investment. Lowest risk, highest return potential. The only thing you need to do is you need to be patient. So what I mentioned before, Bitcoin was named the best asset class of the past decade because it generated 230% annualized returns for holders. Those holders, of course, just only needed to be patient, and then the market rewarded them by insane capital appreciation. And I do believe that we are still at the very start or very early in the whole adoption process of Bitcoin. If you compare it to the adoption of the internet, so the orange bars is the adoption of Bitcoin and the black bars are the adoption of the internet. The internet was invented in the 1950s as a military technology, and it took all the way until the 1990s for it to become mainstream. And now we're seeing that Bitcoin is also now at a pivotal point where it's about to enter mainstream adoption. And when it does enter mainstream adoption, we're going to see the floodgates open and we're going to see even more money flow into Bitcoin. And the first signs are already showing up because a few years ago, many financial advisors didn't want to recommend Bitcoin. And now we're seeing that more and more financial advisors are recommending Bitcoin as an integral component of the standard investing portfolio. Even banks are asking their financial advisors to recommend Bitcoin and Bitcoin-related products to their clients. And even countries are embracing it. So we're seeing a nation-state level FOMO. So in the US, we've got many different states which are now passing bills in order to add Bitcoin to their strategic reserves. And that's why I believe that this cycle is different, because previously we've seen that Bitcoin was a retail asset, meaning that the average investor, you and me, we would invest in this market with our life savings, a spare few $100 left and right. But now we're seeing that large institutions, banks, and governments are investing billions and are getting into the market. So here you see this tweet. Cal is saying central banks could start buying Bitcoin under Trump's crypto proposals. This changes everything. The next wave of adoption is coming fast. Donald Trump already passed a few executive orders to turn the US into the crypto capital of the world. He also passed an executive order to set up a sovereign wealth fund that has a very big likelihood that it's also going to add Bitcoin to his treasury. Here, Swiss banks, so campaigners want Swiss banks to hold Bitcoin in their reserves. So it's not just only in the US, but we're seeing a worldwide wave of banks and institutions and nations reconsidering their stance on Bitcoin. And we're seeing more and more Bitcoin ATMs as well pop up left and right around the world. Now, Bitcoin is becoming an unstoppable force. I see it, very similar to this image that I'm showing here on my screen. So underneath the surface, there's so much happening that is powering Bitcoin. The number of wallets is growing. More and more people are huddling onto it. We have the Lightning Network, which is a layer 2 scaling solution, which allows you to transact even faster and cheaper on the Bitcoin network. We've got more miners that are entering the space. We have the halvings every 4 years, which is making Bitcoin more scarce. Satoshi, of course, which is a very unique founder story, an anonymous person which launched it, or a group of people. We've got ASICs, which are the Bitcoin mining machines that are used to mine Bitcoin, which are becoming better and better. We've got different layers of innovation. So what I mentioned, we have the Lightning Network, but other layers are being built on top of Bitcoin as well. We saw ordinals, which are basically like NFTs on the Bitcoin network as well. We've got SHA-256, which is a crypto hashing function of Bitcoin to make sure that it's secure. We see exchanges popping up left and right and innovating and building on top of Bitcoin and the crypto network. More nodes, which leads to more adoption, an increase in price, more users, and more freedom for the users that are holding Bitcoin. And that's why I believe that this is really important. Now, the main lesson, to recap everything, is if you want to make real money within the world of crypto, you need to stop gambling. Yes, it is possible, and yes, it is enticing to listen to all of those influencers on the internet which are shilling you all of those small cap meme coins, altcoins, and that are promising you golden mountains. The real wealth is being built by simply investing in assets with a proven track record and that show more upside potential, and that you can build your wealth with by simply holding onto them and being patient. And one of the best assets out there, which I really strongly believe in, is Bitcoin. And I'm not the only one. The fact that countries are embracing Bitcoin, banks are embracing Bitcoin, large institutions are embracing Bitcoin, is because the smart money understands this, whereas the dumb money is just gambling their money away on high risk, high return investments. So if you want to build real long-lasting wealth, you need to make this mindset shift. Now, the question that I want to ask you in the comments below, people watching this video, is what are you mainly focused on right now? What is your main focus within the crypto space? Is it Bitcoin, Ethereum, Solana, or altcoins? Let me know in the comments below. I'm really curious, and let me know as well if you found this video useful. If you did, do me one quick favor. Please smash the like button so I know that you got good value out of it. And if you want to see more similar videos like this where I break down complex topics and developments within the world of crypto, money and finance, then make sure to subscribe to my channel, because I'm going to be posting regular videos to make sure that you maximize your profits in this ever evolving market. Well, thanks for watching. Peace out, and I'll see you in the next one. Take care.